How to trade penny stocks for beginners. And at other times so low that you're already well above it, meaning you would have gotten out just as the biggest part of the stock's move was beginning. True price targets aren't meant to be set in stone promises, and they shouldn't be used in a vacuum either. But it would be great if they could make a bit more sense and be a little more realistic. First, a PE ratio is simply price divided by earnings. For example, if a stock's price is $30 and its earnings are $1.25, then its PE would be 24. The most logical conclusion would be to see the stock's price rise until its most recent multiple of 24 was hit again. Why is this so logical? Because people had just been willing to pay 24 times a company's earnings, and they probably still are if there's reason to believe the company's earnings will continue to improve. So $2 x 24 equals $48. So the price target I'd have for that stock would now be $48. Anyway, what you'll find is that most of the time a stock's PE ratio using EPS actuals is higher than its PE ratio using its forward estimates. As the company continues to report, the forward PE ratio typically increases, which means the stock price increases as the earnings projections are coming to fruition. And as more optimism grows over future earnings growth, you may see the PE ratio grow even more, getting even higher than its previous multiple. And then multiply it by the equation of its. Let's say a stock's price was $50 and its current PE was 20. Let's also say its forward PE was 15. Take 20 divided by 15 and you get 1.33. Multiply the stock price by 1.33 and you get $66.50. Once again, this makes sense because if investors are willing to pay 20 times earnings now, assuming the company's earnings forecast looks good, why wouldn't they be willing to pay at least it in the future? The screen I'm running today finds stocks with PEs under the average for their industry and are under their average PE over the last 5 years. The stocks also have a price target of at least 20% more than their current price.